Let me see who is on live right now. Okay. Just give me a moment. Let me see how many of you are cross-posted. Hi. If you can hear me, can you just comment into the chat box? Or can you just hit the like button so that I know that you can actually hear me? Okay. Okay. Hi everyone. Good to see all of you. Okay, let me just make sure that I can see your comment as well. Okay, good. I see you, Brian. Okay, I see Brian, Edmund, Jimmy as well. Okay, and let me see who else is inside with us right now. We have about 15 of you guys. Okay, so once again, yeah, I mean, we have stopped this series for about a week, and right now we are back. So as per usual, we will wait for about 8:05, for more people to actually jump in before we would actually get started. GE 2020 ongoing. Okay, cool. I didn't follow the general election. Hi, Albert. Okay, we have Victor is here as well. Jackson is in as well. Okay, Mei Ling. Hi, Mei Ling. All right, good to see all of you. So once again, okay, just hang on for a while. We will get started at about 8:05. So in the meantime, we can just chit chat. So you can just put anything, in the chat group. And then later on at about 8:05, we would actually get started. And today, the company that we are going to share is this company called SPH. I'm sure we are all very familiar with SPH. So I do receive quite a number of requests, because I think quite a number of you guys have this particular company in your portfolio. So I think it's also a good time for me to actually look into this company. And yeah, actually it's pretty interesting. In fact, I think there's a lot of things that before I actually went deep into this company, I didn't even realize that SPH is doing so many things. So later on, there's a lot of things. So again, if you want to support us and make sure that we are able to spread this to more people, you can actually help us, by helping us to like. Okay, and if you want, you can actually smash the love button. And of course, the best of all, you can actually help us to click on the share button so that your friends is also able to benefit from this live sharing as well. Hey Jackson. Wow, ILBW. You need to type the full name so I understand. What is ILBW? Okay, 8:04. So we just hang on for a while. So how is everyone doing? If you are following the general election, can you just type in GE111? If you are not following the general election, can you just type in GE000? All right, we just do a very quick poll over here. How many of you are following the general election? If you are, you can type in GE111, and if you are not, just type in GE000. Again, over here, we do not talk about politics, but then I think that this is still the current hot topic right now. So we just find out how many of you are actually following and watching all the videos by the different, by PAP as well as from the opposition party. All right, so for Brian, it's GE000, so not watching. I prefer to watch our Netflix and YouTube. Wow, okay, we have 2% watching, 2% not watching. So 2v2. New York Stocks Exchange GE. Okay, Albert is not watching as well. Okay, cool. So right now, the time now is 8:05. So we will get started. Okay, so we will actually get started right now. And allow me to actually share my screen with you guys. Yes, So right now you all should be looking at my blue color, very, very bright, dark blue, buy or buy with SPH. If you can see that, can you just type in blue into the chat box? If you can see my PowerPoint slides, can you just type in blue so that I know that you all are able to see my PowerPoint slides? Okay, yeah, and I just realized that I have about 15 seconds delay. Okay, 15 seconds delay. So after I actually spoke for 15 seconds, then it would actually appear onto your Facebook Live. Right, so because I do have some question, some interaction, so I do appreciate, you know, after I ask the questions, you'll just type in as fast as possible. Okay, as fast as possible, so that, you know, we this buy or buy is going to be more interactive. So without further ado, okay, we are going to get started right now. So once again, for those who just came in, very good evening to all of you. So today is going to be our buy or buy series, whereby we talk about Singapore stocks and even US stocks on a weekly basis. So today we are going to look into one of our Singapore companies called Singapore Press Holding, which is SPH. So I think this company, you know, doesn't need me to further introduce, because again, every morning, you know, you read the newspaper, you know, we know that this is actually all from Singapore Press Holding. So this is a company that as a Singaporean, we should be all pretty familiar with. But having said that, it doesn't mean that we understand the business, whether are they profitable or whether are they a good business to invest in. And that is what we are going to explore today, whether is SPH a buy, BUY, or is it going to be a buy, BYE. So very quickly, okay, I think very important, if you have not seen our video before, we have actually talked about many other companies, like for example, Viacom, Sheng Siong, you know, Singapore Airlines, even US companies like Visa, Adobe. So all these very interesting company, if you want to watch them, you can actually go to our YouTube channel, search for Ultimate Investing. And if you want to follow us, you want to get the latest video, just remember to subscribe and you will be able to receive the latest video link as well. And of course, before I start, it is very important for me to just make sure that there is this disclaimer. Okay, again, today what I'm sharing with you is purely educational purpose. It is not a recommendation to buy or sell. So please, very important, do your own due diligence. Make sure that you take what I shared with you as a certain perspective, and then make sure you do your own checking as well. If you are comfortable to make your own decision, then of course, please go ahead and do it. Right, so the format that I'm going to go through is basically in this particular format, which I term it as big profit, whereby we will talk about the background, the industry, the growth. We do some comparison. We talk about the risk, opportunity, and last but not least, we want to look at the financial of this business. So in today's company for SPH, because it's a relatively easier company for Singapore, I'm going to just combine some of them. So I'm going to combine things like background, industry together. And peer comparison, I think that this company is pretty much on its own in Singapore. So we are not going to talk so much about peer comparison as well. So starting with the first one, coming to the background. So this company, Singapore Press Holding, is actually incorporated in 1984. Right, so that is about 5 years older than me. So that is about 36 years old. 36 years old is a 36 years old company. And it is actually Asia's leading media organization, and of course, one of the largest in Asia as well. So in terms of the business, so what exactly does SPH do? A lot of us are familiar with the newspaper portion, you know, the press portion. So of course, they do media, which comprises of your newspaper, your magazine. So that is one of the business segment. The second segment, rather interesting, is SPH is into the property segment as well. Okay, SPH is doing into property. So they do actually owns quite a number of property in Singapore. And of course, the last one, okay, very interesting. They are into aged care. All right. So under the property, there's actually two sub segment as well. One of them is into the retail, which is the shopping mall. And of course, the second one is into this particular thing called purpose-built student accommodation. Okay, basically in short, you can call it hostel lah. Okay, or maybe the high-end hostel, right? So in short, we're going to call it PBSA. So later on throughout the presentation, I'm going to use the short form PBSA. It will represent this purpose-built student accommodation. So starting with the first one, let's talk about media. So what are some of the media that is actually under this particular area? Of course, the first one we are familiar with is newspaper. The second one is, of course, magazine as well. So again, I would say that we all know that Singapore, in the past, there's quite a number of magazines that we do watch. I mean, when I was young, I watched, like, for example, okay, I can't really remember. I think there's a magazine called Teenage. You know, there's also a magazine, yeah, actually I can't remember. But you know, right now I realize that the number of magazines in the market is a lot lesser. Okay, it definitely has reduced significantly. And of course, we have the online classifieds, right? And then we have the outdoor media. Okay, so don't worry, later we will also dive into each and individual one of them. I'll give you more examples. Then we have the digital products. And of course, last but not least, radio station is also under SPH as well. Again, not all radio station. Okay, quite a number of them is under SPH. So let's start with the first one, which is our newspaper. So very we are familiar with Straits Times News, Sunday Times. Then of course we have our Business Times newspaper, 联合早报、联合晚报、新民 Daily News, ZB Commerce, Times Out, Berita. This is for the Malay, and of course the Tamil. Yeah, and of course the last one is Tabla, right? So these are all the variety of the newspaper that actually is published under SPH. So some of them is the hard copy that you actually ordered. Okay, the one that you actually read it inside the toilet. There's also another one which is the digital one. So nowadays a lot of them are actually digital, so you can watch it on your phone, you can watch it on your iPad. Yeah, basically it's everything online. And of course the next one is magazine. So of course magazine, we have the SPH magazine, we have the second U Weekly, and Health #1. So right now only 3. All right, there's only these 3 under SPH in terms of magazines. And of course, radio station. So which one do we have? We have the SPH radio, Money FM 89.3, 1FM 91.3, KISS 92, 96.3, How FM, and UFM 100.3. Right, yeah. So basically 6 radio station under SPH. And last but not least, we are going to talk about this thing called the outdoor media. Okay, so this is again one of the how do I say that, subsidiary of SPH. Okay, it's called SPH MBO. So sometimes when you're outside and you see some like big LED billboards, you know, then at the small corner they will have this term called SPH MBO. You know that these are all managed by SPH as well. So right now what I'm going to do is I'm going to show you, okay, some okay, I think okay, let me go to the more interesting one first. Okay, so let's do a very simple exercise or guessing game over here. So over here, I have 4 different locations with the SPH MBO. Okay, that is actually at that particular location. So can you just type into the comments? Okay, can you type into the comments, where do you think these places are located? Okay, if anyone that you're familiar, you can actually just type it in, and later on, all right, later on, we would actually see whether do you get the correct answer or not. So very interesting over here. Okay, later on, okay, I'm going to go back to the previous slide, but I'll give you about another 5 more seconds. Okay, look through the photo, see whether are you familiar with it, and then type in the location. Where are these, you know, advertising billboards located? So later we will jump back to the answer. Just keep your answer, just comment it in the comments below. And of course, under the digital media, okay, that is something that I think for SPH, they are developing it a lot more right now. They have Asia One, Fast Job, SRX, ST Property, ST Jobs, ST Cars, ST Classified, SG Carmart, Singapore Media Exchange, and of course, this website called Click Through. So these are all the digital, I would say, assets that is being managed by SPH right now. Okay, so I see some of your answers. Mailing mentioned, bottom right is Tiong Bahru Plaza. All right, and then so far only 1%. The rest cannot recognize. All right, so I'm going to release the answer. Okay, so on the top left we have HDB Hub, okay, which is the Ang Mo Kio, and on the right hand side we have the top right we have Bedok Town Square. Bottom left we have Clementi Mall, and yes, on the bottom right is Tiong Bahru Plaza. You know, so of course there are actually a lot more locations, including the one at Bugis Junction. That is a very big TV screen that is also managed by SPH MBO. So I think they are one of the largest in terms of outdoor media in Singapore. Next, we're going to talk about the second segment of SPH, which is the property. This is a segment that is very, very important for the business. Right. So SPH, they actually own 65.92% of SPH REIT. So this is actually a separate company, okay, that is listed on the Singapore Stock Exchange as well. But as you can see, SPH own, I would say 65.9%, which is a pretty big chunk as well. So whatever money SPH REIT make, they will get 65.92%. So what are some of the REIT, SPH REIT under this is Paragon, you have your Clementi Mall, you have Real Mall, Fig Tree Grove, which is in Australia, and they actually acquired another Australia asset called Westfield. And if not, I'm not wrong, Westfield is one of the largest in Australia. So really, really huge shopping mall. But again, for Fig Tree and Westfield, they don't own 100%. You can see they own 85% of Fig Tree and they own 50% of Westfield Marion. So once again, next time when you go to, if let's say you are an SPH investor, you go to Paragon, okay, you can remind yourself that you actually own part of Paragon. And of course, we have the retail sector in Singapore. So what the previous one is actually owned by, one of the subsidiary, which is the SPH REIT. But SPH, they themselves, they also own certain asset in terms of property as well. So on the left, you have your Seletar Mall, which is 70% owned by SPH. And they are actually developing this new integrated condominium as well as a shopping mall. So this is called the Woodleigh Mall and Residences. So it's actually co-developed by SPH and another company. So they have 50% stake in it. So you can see really, really big project that they are moving into right now. Now they are actually a developer as well. And of course, the second other segment other than the retail is actually the PBSA, which is the student hostel that I mentioned. So they have on the left-hand side in Germany. So the German student accommodation, 100% owned by SPH. And on the right-hand side, which is one of their largest portfolio in terms of student hostel, you can see that the overall portfolio size is more than 1.5 billion. Okay, more than 1.5 billion. So they manage 7,726 beds in 18 different cities, 28 different assets, and in 2 different countries. So those are mainly, if I'm not wrong, is in London and UK. Okay, most of the hostel is in UK, where all the established schools are. And of course, another segment, which is the aged care. That is where we talk about this particular place called Orange Valley. Orange Valley. So maybe y'all can share with me. Okay, how many of you are familiar with Orange Valley one? If you are familiar, if you have seen it before, can you just type in 888? Okay, if you have heard or familiar with Orange Valley, can you just type in 888? If you are not, if you don't know, never hear before, type in 555. Honestly, for me, I have never noticed about this Orange Valley before. It's probably the first time that I actually read about it and I actually see the particular name. But surprisingly, they are actually one of the largest in Singapore and is also managed by SPH as well. So you can see on the right-hand side, they are actually still, they are not performing on the optimal yet, okay, but the bed occupancy ratio is increasing from 76% in 2019, increases to 78% in March 2020. Right, and of course, other than Singapore, okay, they actually went into Japan as well. So you can see that they actually, they had an acquisition of 5 high-quality assets in Hokkaido, okay, and it was actually announced this year only, so February 2020, for 65.8 billion. So this is also their first overseas investment in Japan in terms of this particular business segment, all right, in the aged care business. So very, very interesting. And of course, we are familiar that Japan is an aging population. In fact, Singapore, I would say that moving the next 20 years, we are also moving towards aging population. So like what at the bottom, they mentioned that the market is actually pretty big. Okay, the market is actually quite a huge market. So I think this is an area whereby there is definitely potential growth for this particular company. Oh, okay, quite a number of, I just saw your answer. Quite a number of you guys actually heard of Orange Valley before, except for Brian, right? So Brian probably the same age as me, or maybe even younger, okay. Anyway, the profit percentage for each business segment, okay, is actually over here. If you look at 2019 first half, all right, the profit for the first half, 35% actually goes to the media, 66% goes to retail and the student hostel. And of course, for aged care, it's actually minus 1%. Okay, why is it minus 1%? Because basically they are losing money lah. Okay, they are losing money. And of course, if you compare it to 2020, you can see that media is 8.3, retail and student hostel is 85.2%, and aged care is now 6.5%. So why do I want to show you the comparison? Basically, first of all, I just want to show you that in terms of the media, is definitely one of the highest affected segment of this particular company, right? And of course, they are actually pushing a lot more into the retail, okay, by buying actually more asset and building up more buildings. And at the same time, they are expanding a lot into their student hostel, which is the student accommodation. So based on this, you can see that their business right now, okay, maybe we can change name lah. We don't call it Singapore Press Holding. I think we can call it Singapore Property Holding. I think it makes better sense, because 85% of the profit actually comes from think of a property. So the next time people tell you that SPH is doing newspaper and tell them, say no, SPH is actually Singapore Property Holding. Okay, they own a lot of property. Next, we look at the growth factor of SPH. So what they do is they actually, how they grow is they have a lot of strategic asset acquisition. Like I said, they keep buying a lot of asset that is generating good cash flow. So in May 2019, okay, they actually sold off their investment in Chinatown Point for 10 million gain. Yeah, so they used to also own Chinatown Point as well. And April 2019, they partner Keppel Corp to acquire and privatize M1. So yes, SPH actually own your M1 as well. And July 2019, they actually invested 60 million into this prime US REIT, right, for 7.38%. And subsequently, they also exercised its option to acquire 20% of KBS US Prime Property Management, so which is the manager of the previous REIT. So you can see that they are actually spending a lot of money and going into the overseas market. And subsequently, in December 2019, this is where just now what we mentioned, they added the second mall in Australia, 50% stake in Westview Marion Shopping Centre. And December 2019, another 448 million into a UK student housing deal, right? To increase their total bed, to 7,000 over. So they added another 2,383 bed under this particular brand called Student Casa. Right, so it's actually quite a premium brand. It's not the very low end one. It's actually quite a premium high end student hostel accommodation. And of course, just this year, they actually acquired the Osaka, the H Home, right, with 65.8 million. So you can see that they have actually been doing a lot of buying of asset, okay, in terms of the property as well as in terms of the aged care. So in terms of the media arm, probably they are not really doing much acquisition. In fact, they are actually cutting a lot of costs when it comes to the media arm as well. So what are some of the risks of this particular company? I would just summarize them into 4 points. Falling advertising revenue, average daily print circulation is declining. Portfolio of retail more affected by COVID-19, and of course the PBSA is affected by rental rebates due to university closure. So let's dive into each and individual one of them. So we all know right now is the COVID period, so definitely the shopping mall are highly affected, especially we talk about our very, very extremely high-end Paragon. Most of the customers are overseas, foreigner, are tourists. They're coming into Singapore to spend their money, right? And of course, right now they can't even come in. So definitely highly affected in terms of Paragon. So as long as we are not able to open up to tourists, they will continue to be affected. And of course, in Australia as well, I think it's the same worldwide. As long as you're in the retail scene, definitely it will be highly affected. And of course, secondly, we talk about the falling advertising revenue. So once again, we can see that because of the COVID-19, business are not doing well, businesses are cutting down on their advertising. So definitely it will affect. But of course, at the same time, there are a lot more alternative when it comes to advertising for businesses. For example, people are moving into YouTube. People are moving into Facebook. People are throwing advertisement into Google. And many, of course, other places that is relatively more, I wouldn't say more effective because it really depends, but there's definitely more options out there on the digital era right now. So advertising is definitely falling revenue. And of course, we can look at the student accommodation. Again, all the students now, they are not in school, especially all the top schools like I don't know, Stanford, Harvard, so even for a lot of Singapore foreign exchange students, they actually came back to Singapore, and right now, they are waiting for news for them to actually go back to school. So with that, actually one of the term, they have actually lost their income, and of course they have to do certain rental refund as well. So definitely affected in terms of the student accommodation business, which they are highly focusing on right now. So the impact of it, we can't really see it as of now, but I think it is actually quite a big risk, especially when they are throwing so much money, and one term without business is actually quite detrimental. And of course, we want to talk about some of the opportunity of SPH as well for those of you who love this company, right? So this is very recent news, published on the 30th of June, which is actually about 2 days back. All right, no, 1 day back. Yeah. SPH formed joint venture with Keppel Unit to develop data center facilities. I think right now the trend is not to buy retail property, it's not to buy industrial property, but rather is to buy industrial property or commercial property and develop that into data center. Okay, develop that into data center. So I think with the growing 5G and with the growing trend of technology, okay, there are more and more data center, and Singapore is actually one of the places whereby a lot of people like to open a data center. I'm not sure why, but yes, okay. I think for the Keppel unit, they have been proven to be successful with their data managing of the data center. So SPH actually combining with Keppel as well. So that's of course a good news. They are moving into something that is actually growing, an industry that is growing and has relatively more potential. So this is going to be 60% owned by Keppel and 40% owned by SPH. And of course, if we look at another good news, another opportunity, the digital subscription is actually growing. So total subscription grew by 8%. That means the total number of people actually reading newspaper actually grew, or subscribe to the newspaper actually grew. It's just that the number of print circulation declined. So less people are ordering the hard copy newspaper, but more people are actually subscribing to the digital copy. And of course, we know that there's always pros and cons. Digital copy are a lot cheaper when it comes to the subscription compared to the physical newspaper. But at the same time, the cost of generating is a lot cheaper. Because when you print, you have to deliver and all that. So there will definitely be a lot more hidden costs over there, hidden expenses. But when it comes to digital, basically it's just upload and everybody get to see it. Yeah. So in terms of the efficiency, it's definitely lower in terms of digital. So it's relatively a good news that I think Singapore, we still watch the news. So you can see over here, the digital ad revenue is actually holding up. More people are putting advertisement on the digital platform, right? And the overall digital revenue has actually went up. So that is a sign of a recovery, at least in terms of the digital media area. And of course, there's also a good news. COVID-19 boosted the digital business because the average page view increased 4 times, okay, ever since the DOSCON orange. So you can see that January, we had 1.4 million average page view. And in February, it increased 4 times to become 5.6 million. So yeah, we are really bored. We have nothing to do. And then we started to surf Straits Time online or some of the other websites. Right, and of course, when there's more people watching, it also means that there's higher potential for digital conversion and subscription. So more people will subscribe, and advertiser will want to put it there because there's actually more people watching it as well. So that's definitely a good news. And now we're going to move on to the final portion for SPH, which is the financial fitness. Right, so 577 financial checks over here. We have our growing revenue, growing positive earnings per share, growing free cash flow, ROE more than 15%, net margin more than 10%, interest coverage more than 5. And the last one today, we're going to use PE ratio less than 12. So let's dive in. So the first one, growing revenue. So we can see that, okay, from the right to left, it is growing, but from the left to right, it is not growing. So unfortunately, we actually read from the left to right, 2010 to 2019. So this is definitely a not growing revenue. So second one, positive earnings per share. okay, we are not so strict. We didn't include growing earnings per share, but in the case, at least for this company, they are still profitable. So that is the only thing whereby I still kind of like lah. If let's say this company is losing money, probably today I won't even want to talk about this company. But don't worry, SPH is still profitable, except that it is declining. So it's a tick for positive earnings per share. Growing free cash flow. Okay, wow, this is really quite a very huge red flag. You can see that most of the free cash flow is negative. Okay, that of course the main reason comes from all their investment into acquiring all the asset. So as a result, not exactly the best that I like to see. All right, so definitely across. Return on equity, how efficient are they? Of course, we can see as their earnings start to drop, definitely ROE will be affected. So ROE, another cross. Net margin, okay, surprisingly, their net margin is still pretty good. Okay, I would say that it's because people, in a way, there's still certain branding when it comes to advertising. So people are still willing to pay relatively a premium lah. Okay, to put something on the newspaper, to put something on the digital media. So because of that, net margin is still pretty healthy at 21%. Of course, we can also see that it has been dropping lah. It has been dropping, but at least at a 21%, I think it's still pretty healthy. Interest coverage, that is where we want to look at how long can they actually sustain to pay off their interest. So we want more than 5, and right now they are slightly above our expectation. Okay, so 6.48, so definitely another pass. Okay, but again, something that I will be a bit wary of. I will actually continue to keep track, because you can see that the interest coverage has been dropping. So as this company continue to, if they are continue to move towards this angle, there's a tendency that interest coverage will drop to become less than 5. And that is something that we want to be really careful, especially during this COVID-19 period. And of course, for the last one, PE ratio to be less than 12. So definitely, I would say that the price has went down significantly. This company used to be trading, I think back in 2013 or 2015, they were trading around $4 plus. And right now they are trading only at $1.29. Can you see? So can you imagine if you bought this company 4 or 5 years ago, thinking that this is a blue chip company, solid company? Unfortunately, the price has been dropping really significantly. So right now it's one of the lowest price ever, even cheaper than 2007, even cheaper than the last financial crisis. So that is how cheap this company is right now. So P ratio less than 12 right now is 10.58. So yes, it's another pass. So to summarize the financial fitness, we have 3 out of 7. Okay, so sorry, 4 out of 7. So 3 fail, 4 pass. So to summarize what I have discussed about this company, I'm going to talk about 3 good points and 3 not so good points. So starting with the first one, first good point, the good shift from press subscription into digital subscription. So we can see that this company, they are evolving to follow the technology. So which is something good. At least we see that they are moving, and we start to see certain good take-up rate from the digital subscription as well. The second good point is that property retail, in terms of the retail and the student accommodation, they are doing relatively well pre-COVID. But of course, right now, with a lot of uncertainty in not just the retail scene in Singapore, the retail scene in Australia, and even their student accommodation in London and in UK, I would say definitely they are affected. But how bad is it? We can't really tell as of now. So, but other than that, I would say that they actually did pretty well when it comes to acquiring all these assets pre-COVID. And of course, the last one is acquiring of M1, and the expansion into data centers would be again tapping onto the growth of 5G and upcoming industry growth. So this is again the 2 areas that I'm really interested into, which is 5G as well as moving into data centers. So I would say that these are areas whereby the next 10 years, 20 years, they will still be they will be able to ride on the trend of these 2 particular industry. So that's the 3 good point of SPH, and now we're going to look at the 3 not so good points, starting with the first one. Business continuous success depends a lot on critical asset acquisition. So right now, okay, they do a lot of buying, but again, you need to have a lot of money lah. And if you look at the free cash flow, okay, a bit disappointed, negative free cash flow. So there's a limit to how much they can actually buy, right? So that is of course the first bad point. The second bad point is the company is moving away from its core business. Like what I mentioned, this is no longer Singapore Press Holding. Okay, next time we call it Singapore Property Holding because they own more property. They make more money from property than their media arm. All right. So I don't have to explain further. And of course, the last one is negative free cash flow is unhealthy and the dividend payout has been dropping year after year. So I think they just released the latest dividend at about 15 cents. And that is really, really, really pretty disappointing. But they don't have a choice because the company is not doing well with the COVID going on. They need to conserve more cash. And yep, that is really not a good news for those of you who actually bought into this company and hoping to collect dividends. You are going to expect even lesser dividend. So overall, if you ask me, is this going to be a buy or buy? Okay, before you hear it from me, I want to hear it from you guys. What do you think? What do you think about this company, Singapore Property Holding? Okay, Singapore Press Holding. Is this going to be a buy, BUY, or is this going to be a buy, BYE? Can you just put it into the comments below? I want to hear it from you guys. Just type in BUY or BYE. So I'll give you about 10 seconds. Think about it. Put in the answer. Yes, I see your reply, Edmund. Edmund say bye-bye. And anybody else? Right. So really, I would say that this is not a complicated company to look at, but rather interesting in terms of how they actually diversify into the different asset and even into elder care. Okay, Edwin also say bye-bye. Jimmy say bye-bye. Weiling also bye-bye. Esmond bye-bye. Ling Sing bye-bye. No. Ling Sing say bye for long term. Okay, Zihao also say BU bye. Bye-bye. Albert say BUY. And Jimmy very good. Singapore Press Holding, press money out of us. Mei Ling also say BUY. Okay, so you can see that different people still have different view. Of course, for me, I wouldn't say that this is outright. Okay, let me release the answer first. Okay, so for me, okay, it's going to be a BYE. Again, why? Although it is cheap, okay, like I said, although it is cheap, but at least for now, I see that everything is still going down. And will it go down further? The answer is maybe. So I need to see at least a sign of U-turning in terms of the profit. That means they start to make more and more. All right, that is where I would prefer to actually jump in. Because right now when it's going down, you do not know where is the ending. You do not know where it will stop. And with the COVID going on, there is also a possibility that they might even become negative. That means they might even lose money moving forward. So even though it is very established brand, Singapore Press Holding, but like I said, they are actually moving away from what they are actually used to be known for. And when it comes to the asset, I would say that it's going to be challenging. It's definitely going to be challenging. A lot of buildings, a lot of industries are affected because of COVID. So I would say that if they actually focus more on the media, in terms of the digital media, I would say that they actually have a higher possibility, or rather a more potential, because we know that everybody is moving into online media. Of course, not everybody can do Facebook advertising. There are still people who prefer to target certain Singaporeans. So you still prefer to put, for example, on newspaper and things like that. But if let's say they focus more on the digital media, digital ads in Singapore, I feel that there's definitely more potential. Right. And of course, one of the plays that I love to watch, which is SG Kamat. I love to watch their YouTube video. But I do agree that I feel that the whole quality, there's definitely room for improvement in terms of their digital media. So for now, it's going to be a buy. But definitely, I'm going to continue to monitor this. And if I feel that there is a sign of recovery and the price is right, maybe I will do another series of SPH. And the next time you see I do it, make sure you tune in, because the next time I do this company again, definitely is going to be a green color, BUY. So for that, okay, I end off my presentation for today. So once again, for those of you who are new to our Ultimate Investing, if you have not joined us, you can actually get a free Singapore shopping list at t.me/ultimateinvestorsg. And of course, please do subscribe to our YouTube and like our Facebook page so that you can continue to watch our Facebook Live on Buy or Buy series. So this coming week, we have another series of Buy or Buy, which is going to happen. Let me see. I don't know when. Let me see. Is it Sunday? Yes, this coming Sunday at 8 p.m. Is it 8 p.m.? Yes. Okay. Yeah, anyway, this coming Sunday, we have another Buy or Buy series, and I'm going to talk about this company called Facebook. And we all know that Facebook prices has dropped recently because of some scandal and news. And is this an opportunity for us to buy into Facebook? Join us this coming Sunday, 8 p.m. And I'll see you guys next time in my next Buy or Buy series. And for now, bye-bye.